All right, let's get right into it. If you just glanced at the market today, you probably thought, wow, what a snooze fest. But that's because if you only looked at the main index, you completely missed the real story. Something big is brewing just under the surface, and we're about to break down exactly what it is and what it means for tonight's session. And this, right here, is the key. You gotta stop looking at the headline number. The real action, where the smart money was flowing, was happening somewhere else entirely. So if the big index wasn't the story, what was? This is the story. 420 billion won. While everyone was watching paint dry on the main index, this massive wave of foreign cash just crashed into the market. And let me tell you, that's not just a small bet. That is a huge move made with some serious conviction. And this image just perfectly captures the mystery, right? You're looking at the KOSPI index. It barely moved, down just a fraction of a percent. So the million-dollar question, or I guess the 420 billion won question, is if all that cash showed up to the party but didn't go into the main index, where in the world did it go? Okay, let's play detective. We're going to follow the money trail because the data shows this fascinating split in strategy, and it tells us exactly what these big-time foreign investors are betting on. Now, check this out. This is what's so fascinating. While regular retail investors and even the local institutions were getting nervous and selling, you see that one green bar? That's foreign investors. They were basically the only ones buying, and they were buying with both hands. This wasn't caution. This was pure aggression.
And get this, they weren't buying the boring, safe, value stocks that pay a dividend. No, they were funneling all that firepower into the high-octane what-if future is now sectors. We're talking biotech and semiconductors. They're not buying what a company is worth today. They're betting on what it could be worth 5, 10 years from now. They're buying dreams.
And here's the proof in the pudding. Just look at these insane moves. ABL Bio rocketed up over 9%, Samsung, Peptron both up over 5%. And there was no big news, no earnings beat, no FDA approval. So what lit the fuse under these dream stocks all of a sudden? Well, this brings us to the absolute heart of the matter. To get what happened today, you have to understand this one kind of geeky but super important financial idea, the discount rate re-rating. So what the heck is that? Okay, think of it like this. Growth companies, especially in biotech, are all about promises, right? They promise they'll make a ton of money, but way, way in the future. The discount rate is just the math Wall Street uses to figure out what that pile of future money is actually worth in your pocket today. Let's break it down really simply. Step 1, you've got a promise of cash, say 10 years from now. Step 2, you have to discount it using today's interest rates. You can think of a high interest rate as being a penalty for having to wait so long for your money. But, and here's the magic in step 3, when interest rates look like they're about to fall, that penalty for waiting gets smaller. And when the penalty gets smaller, the value of that future promise today doesn't just go up a little, it explodes. This table right here, it simplifies the whole idea. When interest rates are high, waiting for that future payday is expensive, so today's value is low. But when interest rates are low, waiting is cheap, and boom, the present value skyrockets. Those foreign investors weren't just buying stocks today. They were making a huge bet that the fundamental math of the market is about to change. So, okay, that's what happened in Asia. Why should you care? Because this isn't some isolated event. It's a preview. It's a massive signal for what could be coming to the US market as soon as the opening bell rings. The message really couldn't be any clearer. The smart money is rotating, and they're rotating aggressively into growth assets. They're getting ahead of a potential drop in interest rates, and they're betting that this trend has legs. It's risk on time. So, what does that mean for your screen tonight? Well, based on this flow, you'll definitely want to have the Biotech ETF, XBI, and the Semiconductor ETF, SOXX, pulled up. And with all the heavy buying in the big Korean tech names, that could mean more upside for stocks like NVDA and Micron. All right, now for the part that really matters, the game plan. It's one thing to know the why, but you've got to have an action plan with crystal clear levels for when you're right and, more importantly, for when you're wrong. So here it is. The two scenarios, plain and simple. On one hand, the bull case. If Nasdaq Futures hold above 25,650, the rally is on and you can ride that wave. But, and listen up, this is the big warning, This entire growth party is built on one thing: interest rates staying low. If the 10-year Treasury yield spikes above 4.2%, or if the Nasdaq breaks that key support level, the whole reason for the party is gone. That's your signal to head for the exits, not to buy the dip.
So really, it all boils down to this. It's that simple. If you see yields falling, the biotech and growth wave is the place to be. If you see yields spiking, the party's over and cash is your best friend.
And that leaves us with the ultimate question as we head into the session. The smart money has placed its bet. We understand the mechanics behind the trade. Now everything, the entire growth rally, is balancing on this one single number. So keep your eyes glued to that 10-year yield. It's going to tell you if the dream continues or if we're all about to get a serious reality check.